Welcome to the deep dive. We're jumping straight into Rivian's latest shareholder letter, the Q3 2025 numbers.
Yeah, and the earnings report. Lots to unpack.
Exactly. Our mission today, figure out where Rivian stands financially right now and really map out the R2 launchpad.
Okay, so starting with the financials, the Q3 headlines were actually, well, pretty strong.
Better than expected, certainly. They beat the Wall Street consensus pretty handily.
They did. The adjusted loss per share, for instance.
Came in at $1.65. Analysts were looking for more like a 72-cent loss, right?
Right, and revenue beat too. $1.56 billion against a $1.5 billion expectation.
That's a huge jump year over year. What was it, 78% consolidated revenue increase?
Yeah, $1.558 billion this Q3 versus about $874 million same time last year. Pretty significant growth.
But the really interesting number was the gross profit, wasn't it?
That's the one that caught my eye. $24 million in total consolidated gross profit.
Which is their second positive quarter on that basis this year, and way better than the loss analysts expected.
Yeah, consensus was for a loss maybe around $38.6 million.
Yeah.
So a definite beat there.
Okay, but let's break that down. That $24 million profit, it wasn't from selling R1s, was it? That's kind of the core question here.
No, exactly. And this is where it gets a bit more complex. That consolidated profit number, it hides a pretty big gross loss in their main automotive business.
How big?
$130 million gross loss from auto operations. Now, that is a big improvement year over year, about $249 million better.
But still a loss. So how did they get to a consolidated profit?
It was entirely offset. $154 million generated from their software and services segment cover that auto loss and then some.
Right. So the company's stability, that beat right now, it's really leaning heavily on the tech side, the software partnership.
Especially the VW deal. That joint venture for software and electrical architecture development, they recognized $214 million from that in Q3 alone.
Wow. So that partnership cash is essentially funding the gap while they improve the R1 margins and, get ready for R2.
That seems to be the strategy. And the software and services revenue overall just exploded, up 324% year over year.
We should definitely acknowledge the manufacturing improvements, though. They cut costs significantly.
Absolutely. Nearly $19,000 reduction in the automotive cost of revenues per vehicle delivered year over year. That's huge.
It shows the underlying operations are getting healthier, even if auto gross margin isn't positive just yet.
Definitely moving in the right direction. And that discipline shows up in their forward guidance, too. They reaffirmed the full-year outlook for 2025.
Okay, so what are they sticking with?
Deliveries. Still aiming for 41,500 to 43,500 vehicles for the full year.
And we saw Q3 was the highest delivery quarter, right? Over 13,000 delivered.
13,201 delivered, yeah.
Yeah.
They produced fewer, about 10,720.
And the report mentioned that high delivery number was partly due to people rushing to buy before a tax credit expired.
Exactly. The 45W tax credit expiration. That's a crucial context. It pulled some demand forward.
So we shouldn't necessarily expect Q4 to be quite that high then.
Probably not. Incentives always cause these bumps in demand. Financially, though, the guidance holds. Adjusted EBITDA loss still projected between $2 and $2.25 billion.
And capital expenditures, still planning big investments.
Yep, $1.8 to $1.9 billion in CapEx. They're spending money to scale up.
Which they can afford to do given their liquidity position.
Right. They ended Q3 with $7.7 billion in total liquidity.
Wow, nearly $8 billion.
Yeah, most of that, over $7 billion, is cash, equivalents, and short-term investments. So they have a pretty comfortable runway for their plans.
And those plans really center on the R2, don't they? That's the next big chapter.
Entirely. R2 is the key. It moves them into that bigger market segment, average new car price around $50K, often a 5-seat SUV or crossover. That's where the volume is.
So the timeline for R2, still on track?
Seems so. They're sticking to the plan. Start production and deliveries in the first half of 2026.
And that's coming out of the Normal, Illinois factory initially, right? Not Georgia.
Correct. They've been doing a ton of work in Normal to get ready.
Like building new facilities.
Yeah, they finished construction on a huge 1.1 million square foot R2 body shop and assembly area, plus a 1.2 million square foot supplier park right there.
And they're starting test builds soon.
Manufacturing validation builds kick off at the end of this year. They also used a 3-week shutdown back in September to upgrade the paint shop.
What did that do for capacity?
Boosted the whole capacity. Normal plants potential annual capacity up to 215,000 units total R1 and R2 combined eventually.
Okay, so R2 isn't just about volume, it's also about new tech, especially the battery, right?
Oh, absolutely. It's a completely new battery platform. They're using this new 4695 cylindrical cell.
And it's a cell-to-pack design. What does that mean exactly?
Basically, they integrate the cells directly into the pack structure. Less packaging, less weight, less complexity. The 46 and 95 cell itself is also much more energy dense, like 6 times the energy of 2170 cells in the R1.
Which should help bring down the cost.
That's the goal. Reduce cost, reduce complexity, improve efficiency.
And there's that other feature in the pack, the bidirectional charging.
Yeah, that's potentially a really big deal. The R2 has a new energy management control module with a built-in bidirectional onboard charger.
So it can power your house, vehicle to home, or V2H.
Exactly. It can supply power from the vehicle to the home. That changes the equation quite a bit. Your car isn't just transport, it's potentially a big battery backup.
Fascinating. And this all fits into their long-term plan with the Georgia facility, too.
Right. They broke ground in Georgia. That plant's designed for massive scale, eventually 400,000 units a year across 2 phases, specifically for this mid-sized platform like the R2.
They're clearly betting big on scaling up production.
But that hardware investment, the factories, the batteries, it relies on their software strengths too.
Let's connect back to that software revenue from Q3.
Okay, that wasn't just a one-off thing then.
No, it feels like part of a deliberate strategy. They talk about their software-defined architecture and AI-centric approach.
We see that in the updates they push out, right? Like the smart charging recommendations. Exactly. Helping owners charge during off-peak hours, potentially saving them, over 20% annually on electricity costs? That's a tangible software benefit.
They also mentioned a new co-steer feature.
Yeah, allowing drivers to make small adjustments while the vehicle stays in its autonomous mode. And they even had a fun Halloween mode update.
Right, the spoopy swamp car costume. But the serious side is the autonomy strategy.
It's all about AI, fusing data from all the sensors, and using the growing fleet to feed that model.
And it seems to be working. They cited a big increase in hands-free highway driving.
Yeah, a 70% jump in miles driven using that feature on the second-gen R1s after recent updates.
So more data collection, better models, faster improvements.
That's the feedback loop. They plan to use the fleet, especially once R2 ramps up, to push out inference updates, basically. Real-time improvements based on driving data.
And they're confident enough to hold a dedicated event for it.
Yep, an Autonomy and AI Day scheduled for December 11th. They clearly want to showcase their progress there.
It also seems like they're spinning out some of this tech talent and IP into new ventures.
That's another interesting angle. We knew about Also, the micromobility spin-out with the e-bike and quadricycle. Rivian still holds about 40% of that.
But there's a new one.
Mind Robotics, focused on industrial AI, using Rivian's own operations data. And crucially, it just secured $110 million in external seed funding.
Wow, okay, so outside investors see value in the AI they've developed just from running their own factories.
Exactly. It proves their software, and AI isn't just supporting the car business. It's potentially a valuable asset in its own right.
Shifting gears a bit, how are they doing on the customer front? Retail spaces, service?
Expanding there, too. They're up to 35 retail spaces, 95 service locations now, and they're getting people into the cars. Over 28,000 demo drives in Q3.
Including those electric joyrides.
Yeah, 1,800 of those, letting people experience the off-road side. Shows good engagement, I think.
And the charging network, the Rivian Adventure Network.
Scaling up nicely. Over 850 chargers now, 131 sites across 38 states.
And they're opening it up to other EVs more, right?
Yeah, over 90% of the network is accessible to all compatible EVs now. And interestingly, non-Rivian vehicles already make up over 40% of the charging sessions.
So it's becoming a significant public network. Did they mention NACS, the Tesla standard?
They did. They launched native NACS support at their Joshua Tree site. Confirms they're moving ahead with adopting that standard fully.
Okay, finally, let's touch on the risks. The CEO mentioned some external headwinds.
Yeah, the usual suspects. Near-term uncertainty around trade, tariffs, regulatory stuff, but specifically supply chain concerns.
There's all kind of concerns.
Rare earth materials, mainly for magnets in the motors, and also the Nexperia chip situation.
Ah, yes, the semiconductor issues impacting everyone. Those are pretty serious potential roadblocks, aren't they?
Definitely major industry-wide challenges. Geopolitics, sourcing stability, it's complex.
So the big question, could these issues delay the R2 launch from that mid-2026 target?
Well, the CEO addressed that directly. He said, while they're actively working on the Nexperia issue and finding alternative sources for rare earths,
Got it.
But based on their current supply chain readiness and the design choices they've made for R2, they don't currently see these issues causing a delay.
Okay, so they acknowledge the risk, but they believe they have mitigation plans in place for now.
That seems to be the message. Mitigating, but aware it's an ongoing risk factor.
All right, let's try and wrap this up. The Q3 story feels like two sides of the coin. You've got the software and IP side, boosted by VW cash, keeping the finances looking pretty stable.
Providing that essential runway.
Right. And then you have the vehicle manufacturing side, improving efficiency dramatically, but still losing money on each car, fundamentally.
Still chasing that automotive gross profit.
So the whole future really rides on successfully launching and, more importantly, scaling the R2 platform starting in mid-2026.
That's the pivot point. But connecting this all together, maybe the most profound thing about R2 isn't just the price or the volume. It's that energy system we talked about.
The bidirectional charging.
Exactly. Think about it. If Rivian hits their production targets for R2 out of Normal and eventually Georgia, we're talking potentially hundreds of thousands of vehicles a year.
Each with the ability to send power back to the grid or a home.
Right. Imagine using all those EV batteries, sitting parked most of the time, as a massive distributed network of energy storage, cost-effective storage.
You're talking potentially gigawatt hours of storage capacity unlocked across the country.
It could fundamentally change how people interact with the grid, how utilities manage load. I mean, it improves grid stability, gives consumers more control. It's much bigger than just building cars.
That really is a powerful long-term vision, something to keep an eye on as R2 actually rolls out.
Definitely food for thought. How that vehicle-to-home capability actually gets implemented and used at scale, that's a story still waiting to unfold.
Absolutely transformative potential. Okay, that's our time for this deep dive. Definitely worth digging into the R2 tech details yourself. It's shaping up to be much more than just another EV.